G'day guys, Chris Doerre here. Today I thought I'd announce the launch of my new channel, Chris Doerre Invests. So basically on this channel my plan is to help educate the public, to give you a bit of a financial education, and I'll be going through things such as property, crypto, stocks, and really I guess teaching you about the fundamentals of money. And just I guess giving you the understanding that money in the bank ultimately won't allow you to ever have financial freedom and will really get you unstuck at the end of the day due to, I guess, how your buying power diminishes over time when you compare it to assets. Because ultimately you've got, as many people would describe it, money printing, because the money supply ultimately increases, and with that the buying power of each dollar decreases. So I'll go into that in a little bit, but to go through some of the asset classes quickly and how they've risen over the last year. So A200, which is the top 200 Australian stocks, that's gone up by 12.33% in the last year. The S&P 500, which is the top 500 US stocks, that's gone up by 27.28%. You've got Tesla, which has gone up by 56.18%. Nvidia, which is graphics cards, that's gone up by 126%. Bitcoin, so now we're into cryptocurrencies, that's gone up by 119.44%. Ethereum has gone up by 613.13%. And then if we go into house prices, so despite the lockdowns, despite people losing their jobs, despite businesses going bust, we've also seen these prices go up. So Sydney has gone up by 30.14%, Melbourne has gone up by 19.5%, Brisbane by 27.9%, Perth by 14.8%, Adelaide by 23.9%, we've got Hobart by 32.1%, Canberra by 27.2%, and Darwin by 20.1%. And look, ultimately, the stock market hasn't all gone up. Not all stocks have gone up. Same with cryptocurrency and same with houses. You can have houses or apartments in particular locations that haven't appreciated, and you've got other suburbs where they've gone up a lot more than these figures. And ultimately what I'm showing is really, at the end of the day, wage rises over the last year have gone up on average by about 2.2% for the last year. And then interest rates are less than 1%. So if you had money in the bank in the last year, ultimately you've been losing buying power. So if you're saving up for a house deposit, well, you've probably gotten further away from your dream of one day owning a home. So to provide sort of a bit of a background as to why we're seeing what we're seeing and why we're really seeing, I guess, our buying power really diminishing. So the Australian economy ultimately is one of houses and holes. So basically we build, in the words of Edwin Almeida, for those who have followed him online over the years, we build $1 million ghettos. So our construction quality is absolutely appalling. So if anyone is familiar with any of the construction defects for high-rise apartment buildings, personally I wouldn't be buying into any of those particularly new ones from, you could even call it the last probably 20 years, would be fair to say. Just the construction quality has been that poor. And really we're just being fit into ultimately shoe boxes. And really, I guess, all those high-rise apartments, all that, I guess you could term it affordable housing, is really being done with the purpose not to, I guess, house Australians, but really to get, I guess, international investors sucked in, thinking that the sort of stock they might buy in those countries would be popular with Australians. So you've got that, and otherwise our only real skill ultimately in terms of what we actually export to other countries is really digging holes, which really isn't all that intellectual, it's fair to say. So it doesn't take a lot of brain power to dig holes. So Australia's economy really is pretty embarrassing at the end of the day when you break it down. And look, we do have a tourism sector, and we do have an education sector, but look, even they're not all that impressive at the end of the day. So, and if we look at our economic complexity, that really shows, I guess, how poor our economy is. So according to the OECD, our economy is the 79th most complex in the world. And according to Atlas, it is 86th in the world. So, and really it's been trending down, and these numbers were from 2019. And for those that wonder, why do we have economic growth? Why is our economy growing according to the statistics? Well, really our economic growth over the years has been due to population growth and due to quantitative easing. So basically, in other words, it's lending via low interest rates and increasing monetary supply and devaluing the dollar. So really, ultimately, it's despite us having economic growth, as it's termed, ultimately we're all, as Australians, becoming poorer. And this is part of the reason why I'm really motivated to make this channel, to really open the eyes of Australians, not from a political perspective as much as really just an investment perspective, and knowing, given how the economy works, these are some of the things you really need to be aware of to really, I guess, take your dollars furthest and really ultimately generate, I guess, income producing assets that really supplement your income and really make it so that you can live the way you want to live. So, and ultimately on top of that as well, as migration rises, what really happens is our income growth actually stalls. So it's really that rate of increase in our income slows down as migration rates increase. Why does that happen? Well, there's more competition for jobs. So it doesn't really help. And in addition to that, well, it's just meaning there's more demand for the same amount of really supply of things on the market. So that means prices go up and make things less affordable for us ultimately. And it should be noted as well that the plans of the federal government is to allow more migrants in. So ultimately you'll be finding your buying power will continue dropping, and really economic conditions for you on a more personal level, unless you're a big business owner and you directly benefit from more migration, really you'll be worse off at the end of the day. And if we're to look at our housing conditions, so in the past you'd be able to buy close to the city on big blocks, nice big houses, but really I guess as these economic conditions are evolving, the young Australians, and this will keep happening from generation to generation, will be forced into these high-rise million-dollar ghettos ultimately, or otherwise the other alternative is we're parked further away from the city, we've got further commute times, and ultimately those living standards are diminishing. So we can't have as larger houses, we can't be as close to the city, so none of those factors are really working in our favour really as, I guess, migration increases, but also the dollar devalues over time. They're really, I guess, the critical ingredients to really understand there. And if we're to take things away from, I guess, that housing angle, which is really, I guess, our greatest expense and I guess the greatest purchasing decision for the majority of Australians will be making in our lives, well, other than that, we're also to really live in these worse living conditions ultimately at the end of the day. We're being forced to work more hours across more jobs, and it's making it harder for us ultimately at the end of the day to have more children. So, and we've had the lowest fertility rate we've ever had, and it's a consistently decreasing number. But in 2020, the fertility rate was 1.58. So ultimately, if you want a healthy economy, you want to have a fertility rate of above 2, because ultimately that means that your internal population without migration is continually decreasing. So really what that is an indication that our economy is deeply ill and really needs a lot of work to really, I guess, encourage internal population growth, so we don't have to rely on migration to be able to grow our economy and all that. So really this trend has really continued down, and it's going to continue to worsen as well as our buying power continues to diminish. As, I guess, the population grows, well, again, it's going to keep forcing us further away from the city or into worse quality high-rise apartments. So really the economic outlook is incredibly poor for Australia. So we really need to be aware of all these factors ahead of us. So I guess going back to the investing perspective, so the one counterproductive lesson that most of you probably will have been taught from no doubt the older generations is that saving is important, and really you want to build up that savings in the bank. And of course you want that in terms of like a safety buffer, but the important thing to realize is if you've got money in the bank, well, it's only earning, it might be 0.2, 0.3% interest, whatever your bank happens to be paying, and that doesn't nearly keep up with the rate of inflation, the rate that assets are going up, be it property, be it stocks, crypto. So because ultimately, again, the value of your dollar keeps diminishing at such a high rate. And look, if you go back in time, we once had interest rates that were actually quite high and quite reasonable, that did make saving actually something where you could have your money in the bank and you'd see it rising. But that's no longer the case in this economic environment where ultimately we have our basically 0% interest rates. So it's really those borrowers that are being rewarded for whether it's buying property or whatever their asset of choice is, because ultimately they're the ones that are seeing the capital growth, and once that debt's being paid down, well, then they can generate their cash flow from that. So it's really important that I guess people are aware that just having money in the bank isn't enough. So since 1950, dollars have lost 91% of their purchasing power. So $1 now is really the equivalent of basically 9 cents in 1950. So that's how extreme the devaluing of the dollar has been. So why has this happened? Well, basically monetary supply has increased and continues to increase over time because ultimately banks lend out money, and it's money that banks aren't actually holding, believe it or not, where they only need a very small chunk of that money to be able to ultimately lend to people to keep increasing that monetary supply. So and also it's really vital to know that during the last couple of years, during this pandemic, well, monetary supply increase has really increased at a historic rate. So no doubt, if you've really been, whether you're looking at property prices, whether it's petrol prices, if you go to the stores and see, the prices have gone up, or perhaps the size of the products that in the past may have been bigger, they're shrinking down. That's called shrinkflation. Well, you're seeing all these factors where, again, your buying power is diminishing at an incredible rate. So, again, it's really vital to be aware of that and ultimately know what to do given that. So, what does all this mean? So, it basically means that you must really all learn how to invest your money, as really money in the bank only over time loses purchasing power. While at least if you have money in assets, be it, again, property, crypto, stocks, maybe you're putting money into gold or silver, other hard assets, maybe it's bonds. But basically, you can, at least with having money in assets, you can experience appreciation. And you can also have cash flow generation opportunities. So ultimately, you don't want to just be working your job until you're 65. Just put your money in savings, but never put your money in assets. Why is that the case? Well, again, if you've got however much you've saved over your lifetime and you've got the money in the bank, well, you better be hoping that the interest rates really rise. And look, there's no guarantee of that, because when you look at what the politicians want, well, no politician wants the economy crashing on their watch. So ultimately, they're really going to keep encouraging for interest rates to keep going lower and lower. Maybe in the future, and we don't know this for sure, but maybe we have negative interest rates. And with the devaluing of the dollar, well, maybe that means that we have hyperinflation at some point in the future. I'm not necessarily suggesting it's going to happen right away, but maybe in the future we might have a hyperinflation environment where people want to get their money out of, whether it's Australian dollars, US dollars, that quickly, that they're going to buy up every asset they can, anything they can at the fastest possible rate. And it's just going to basically see the Australian dollar, the US dollar become irrelevant. And likely in the future, we're going to have some sort of central bank-based digital currency as our currency, rather than being on the dollar as we currently have. So, it's really critical to be aware of, I guess, the importance of investing, because if you can buy, like, let's say you want to buy properties. Well, if over your working life, maybe you can buy 5 properties, and through that income, it might mean you can avoid being on the age pension, which may in the future be worth quite a lot less than it is today in terms of that buying power. So they're the sort of opportunities you can look for. Or maybe you have your money in an exchange traded fund. So that might mean from the stock market, maybe again you can generate that cash flow. Or maybe you put money in bonds, again, to generate that additional cash flow. Or maybe it's in crypto, because if the Australian dollar, the US dollar all go to nothing, well, if you've put money in, whether it's a Bitcoin, an Ethereum, or some other cryptocurrency, well, the value of those currencies will no doubt go up over time, because people will be demanding to put money into those assets. And later on down the track, you can always sell them for other, I guess, income generating opportunities. Or maybe you can just have those, whether it's a Bitcoin, Ethereum, on an exchange, and they can earn interest. So there's all sorts of ways to ultimately earn income and do a lot better than just basically saving and putting money in the bank. Because when you look at the price charts over the time, whether it's for property to see how much it's risen, and there's dips and volatility in all the markets, whether it's property, whether it's crypto, whether it's stocks. But at the end of the day, if you put your money in good assets that ultimately people will want more of over the time and over the long term, well, ultimately that's going to take your dollars furthest. So again, I'll be going through really on this channel predominantly property, crypto, and stocks, and really look at, I guess, what are some of those best investing opportunities, and really teaching, I guess, some of the fundamentals in each of those asset classes to, I guess, really help you make sound financial decisions. So I'm not here to necessarily spruik one crypto or one stock over another, or say this is where you should be putting your money. It's really, I guess, anything that I bring up, whether it's like an area for property or a type of property, or whether it's a type of crypto or type of stock, really it's there to, I guess, help you be aware of what they are and do your own research at the end of the day. Because anything that I talk about, I want you guys at home to really do your own research, do your own due diligence, and make up your own mind. Because I'm not here to shill anything. I don't mind what you do, but I just want you to be educated and aware of the risks of never investing at all. Thanks guys for watching, and if you enjoyed this video, make sure you give it a like, subscribe, and hit the notification bell for future updates. I'm really keen to, I guess, grow this channel and really spread the message, which I believe is a really important one, just for people to really understand broadly. So, and in my next video, I've got my good friend Matthew Donald, who I'll be interviewing, and he's a stock expert and he's been a stock investor of 15 years, highly qualified, and really understands that market. So I'll be going through 10 really critical, basic investment questions with him that'll hopefully, I guess, be another perspective and open your eyes further as to the possibilities of investing and really, I guess, why it's so essential to be an investor at the end of the day. So anyway, thanks guys, and see you in the next video.